Galaxy Surfactants is the stock that we're talking about. It reported a weak quarterly performance in Q3 on the back of the Red Sea tensions. Their profits have declined, the margins have contracted. Unnathan Shekhar, who's the managing director at Galaxy Surfactants, joins us now to talk about that. Mr. Shekhar, hi, good morning, and thanks for joining in. In 9 months of FY24, I think you've done about 8.5% volume growth. But I just want to understand, since, a lot of things have sort of escalated since then, the Red Sea tensions have gone up as well. What do you think you can do in the last quarter in terms of volume growth? And for FY25, what are we looking at?
A very good morning to you. See, this quarter and this year has been a growth year for us compared to the last year. So we have, for this 9 months, grown on volume by 8.5%, more than the band that we indicated at the beginning of this year. Particularly this quarter, we have seen growth in volumes across all regions, apart from India, which has been a very strong geography for us for now quite some time. So we have grown, barring North America, we have grown on all the geographies. This talks about revival of demand and coming back of consumption in the various geographies and markets that we operate. So yes, the Red Sea remains a red flag for the coming period. But we have seen even demand coming back as far as North America is concerned. So as far as the coming year is concerned, we are very optimistic and buoyant about a growth in a band of something like 8 to 9%. So we do believe that we should see the resumption of demand in all the geographies in the coming year.
All right. Hi, Mr. Shekhar. Good morning and good to see you. In Nigel on this side, you're sounding a little bit more optimistic this time than I think the last time we chatted. So this year, You're guiding for around an 8% growth, 8 to 9% growth. And on that base, you're saying volume growth will be another 8 to 9% in FY25. Is that correct?
No. We are talking about a volume growth compared to this year. You're right.
Yes.
This year, we would close at something like 8.5% for this entire year compared to 22-23. And we are confident that we should be able to have another 8 to 9% growth in the coming year.
Got it. So one key number is out of the way. That's the volume growth. What about the EBITDA per ton? Normally you were guiding for that band of around 19,500 to 20,000.
Right.
For the past quarter, it's a little bit lower than that. But you have given some commentary that FY25, it could be at the upper end or even beyond that. So what should be the rough number we should work with for FY25 on the EBITDA per ton, if you want to give us a range or a number?
Yeah. See, we have fallen short as far as this quarter is concerned. But we would indicate the EBITDA band at 19,500 to 20,500, which we have indicated previously. And if you look at this particular quarter, there have been certain one-offs in the quarter 3 of 22-23. Among the major one-off which was not available or which was not there this particular quarter was the export incentive that we had received in the Egypt operations in the quarter 3 of last year, which amounted to approximately 21 crores or so, which didn't figure as far as this quarter is concerned. So otherwise, we have seen all-round performance increase in not only various products and various geographies. We have seen growth in Asia Pacific. We have seen growth in rest of the world, and even the Africa, Middle East, Turkey region.
Sure.
The exception has been North America, which is expected to come back in the coming quarters.
So you're saying that you will hold on to this band, right? 19,500 to 20,500. All right, got it. I'm asking because of the freight rates, because of the Red Sea situation. Just wanted to understand how much have freight rates gone up and what impact would that have on your business?
The freight rates have gone significantly. And we would obviously strive to pass it on to our customers. But then compared to the previous years where the freight rates were normalizing and coming down, we have again seen an increase in freight for various regions. That is one. And number two is that the supply chain has got extended because most of the ships have to pass through the Cape of Good Hope because they can't pass through the Red Sea. So the supply chain, the time has got extended, which we have to factor very well in the coming period. What is important and significant for you to know that we have been, the way we have managed supply chain resulted in us being acknowledged with Excellence Award both by Procter & Gamble as well as Henkel. This is something which is very, very significant, talking about our capability in terms of responding to our customers' demands through the various supply chain measures that we have taken up.
All right. Okay, we will let you go on that note. Thanks a lot, sir, for joining in and speaking to CNBC TV 18. That is Galaxy Surfactants. Their margins have contracted this time around, but they hope to hold on to the guidance that they put forth on their EBITDA per ton.